Welcome back to Market on Close. I'm Sam Vadas on the floor of the New York Stock Exchange. And then there was one. So here's some final thoughts from me on today's session. Obviously, we did see Nvidia under some pressure today, just fractionally lower for the tech company. President Trump saying that the US will allow the company to ship its H200 chips to approved customers in China with 25% to be paid to America. He says this will support jobs and manufacturing, and the same approach will apply to AMD and Intel. AMD higher today. Intel was a bit choppy in the trading session. Wells Fargo saying it sees this news as an incremental positive for Nvidia and has an overweight rating on the shares with a price target of $265. Bernstein also saying it's a positive development as well, reiterating the stock has outperformed. The Financial Times then reporting that Beijing is set to limit access to the products. China has been pushing back, of course, on domestic companies getting their hands on US-made tech to try to help support the local chip industry. But there's still appetite, it seems, because US officials saying they've detained two men over allegedly attempting to smuggle Nvidia chips to China. A third person has pleaded guilty. According to authorities, the men allegedly tried to export at least $160 million worth of the prohibited H100 and H200 GPUs. Now, we also got some better jobs numbers. Switching gears, the delayed October JOTLS report showing that there were 7.67 million jobs available by the end of October. That was better than the 7.2 million expected and more than the previous 2 months. Now, while there were more job openings, which was the encouraging part, hiring activity came off, layoffs ticked up higher, and fewer workers quit. Now, that data, when you take it all together, does show that the job market hasn't changed a whole lot since the summer. Now, of course, that is the final bit of the labour market puzzle ahead of the Fed decision tomorrow. As Ben Emmons, a good friend of our network from FedWatch Advisors, writes, we're seeing an overall improvement of labour conditions, which makes the case for risk management rate cuts less compelling. For markets, that is a good sign because it suggests past rate cuts are helping stabilise employment. Now, the market is currently pricing in a high chance of a 25 basis point cut, but it's not about what they do, but what they say. Investors will be paying close attention to the dot plot and the dispersions within the Fed, the summary of economic projections as well, for clues about what happens next. Now, Oracle is one of the big earnings reports that the market will be watching out for tomorrow when the company reports after the close. Analysts are expecting adjusted EPS of $1.63 on revenue of more than $16 billion for the quarter. Now, shares have rallied more than 35%. That was in the trading session post-earnings previously. That was in September, and that was really helped by one number. It was that record $455 billion in RPO. That's what's known as the future contracts. But the stock has given back those gains over the last 3 months, and there has since been a lot of attention on the company's credit default swap spreads, which have now widened. And what that's reflecting is perhaps a bit of investor concern about the amount of debt it's taking on to fuel the entire AI boom that we're seeing. So obviously we're going to be looking out for Oracle. We're going to be looking out for what the Fed says. So come this time tomorrow, we will be breaking all of that down for you. Obviously, we've seen a bit of range-bound positioning going into that, the Russell at an intraday record, but that's going to do it for us here on Market on Close.